The Philippines scores a major win on the global financial stage, formally dropped from the European Commission's money laundering watch list. The move marks a vote of confidence in the country's reforms and is expected to spur growth in banking, remittances, and digital finance by easing compliance risks for global partners. Jin Kim has the details.
The Philippines is officially out of the European Commission's dirty money watch list. The EU's executive body confirmed that the country is no longer considered a high-risk jurisdiction for money laundering and financial crimes, citing significant progress in strengthening its legal and regulatory framework. The EU said the update reflects alignment with the recommendations of the Financial Action Task Force, the global standard-setting body for anti-money laundering. The delisting is seen as a strong signal to the global market and is expected to deliver immediate gains to key sectors, leading the beneficiaries, the Philippine banking industry. Industry analysts say this will improve coordination between local banks and European counterparts and help unlock funding and investment flows previously constrained by regulatory red flags. Another winner, the Philippines' vast remittance network.
The Philippines is being one of the top global remittance recipients in the world, and this move will actually help preserve and improve banking corridors between the EU and the Philippines, ensuring that our OFW sending money from Europe do not really face disruptions, delays, or even increased transaction costs.
Also expected to benefit fintech companies including e-wallets, digital lenders, and payment platforms, which have struggled with heightened due diligence from international partners. Amid the celebration, the Securities and Exchange Commission vowed to sustain momentum in cracking down on illicit financial activities.
I will leave no stone unturned for SEC to contribute what it should be contributing towards the on the AMLAC our program. Ganun lang naman yun. Everybody should do its job. As simple as that.
The newly minted SEC chief also called for stronger enforcement under his leadership.
Enforcement should be the key rather than exemption from enforcement. For example, there are these exemptive reliefs from SEC rules. While the SEC has the power to grant exemptive relief, meaning to say exempt from the complying with the provisions, for me, the exemptive relief will be really the exception rather than the rule. It will be far in between.
Bangko Sentral Governor Eli Remolona Jr. welcomed the EU's decision but noted that it still requires a final yes from the European Parliament. Still, economists warn that the country must remain vigilant as new threats could put it back on the watch list.
Well, relisting is always possible because of the evolving landscape of the financial market. Second, triggers could be POGO migrations or even the resurgence of POGO. There might be a regulatory loophole or return of illegal operators, especially those involved in illegal operations, money laundering, which can trigger or raise red flags among EU regulators.
Rivera added that the rise of AI-driven fraud and unmonitored crypto platforms could pose fresh compliance risks if not immediately addressed. Jin Kim, Billionaire News Channel.